At 18, the word insurance may still sound like something your parents handle. But between 18 and 25, almost everything changes. And as a side note, I understand you're building your life and you have to choose between price and priority. But during this time, you may move from living in a dorm to an apartment and to a home. In the meantime, you'll buy your first car, start a full-time job, and eventually come off a parent's health plan. However, one wrong assumption can become expensive. Your landlord's policy may not cover your laptop. Your personal auto policy may not cover being used for business purposes. Your employer's disability benefit may replace less income than you expect. And the health coverage you have today may end sooner than you planned. Stay with me until the end, because I am going to give you a simple 18 to 25 insurance checklist that can help you avoid coverage gaps before they turn into money problems. So let's get started. Turning 18 does not automatically change every insurance policy. The issue is that life begins changing faster. Where you live, who owns your car, how you use it, and whether you are still considered a dependent, which can all affect your coverage. With this being said, let's start by identifying every policy that currently includes you. Ask which company provides the coverage, what limits and deductibles apply, and when your eligibility ends. If you cannot answer those questions, you have an assumption, not a plan. Once you know what coverage follows you, the next question is whether your belongings follow you too. If you rent an apartment, your landlord generally insures the building, not your personal belongings. A renter's insurance policy can help protect items such as clothing, furniture, electronics, and other property after a covered loss. It can also include personal liability coverage if you accidentally injure someone or damage someone else's property. If you live in a dorm, some coverage may extend from a parent's homeowner's or renter's policy. However, limits and exclusions can apply. Take a quick inventory of what it would cost to replace your phone, laptop, clothes, furniture, gaming equipment, and other belongings. Do not ask only, how much is renter's insurance? Ask this instead, what would it cost me to start over without it? After protecting your belongings, move to the item that can create an even larger liability problem, your vehicle. A car being insured does not mean every driver and every use is properly covered. The policy should accurately show who drives the vehicle, where it is kept, who owns it, and how it is used. That matters when you move. Take a car to college, let a roommate drive it regularly, or begin delivering food or packages. Personal auto policies may limit or exclude certain business activities. I would rather have that conversation before an accident than after one. Do not choose liability limits only by finding the cheapest payment. A low liability limit may meet your state's legal minimum, but it could still leave you responsible for costs above that limit. State requirements vary, so this is where reviewing the actual policy matters. The car may be the most visible risk, but one hospital visit can affect your finances even faster. Now, as a disclaimer, I don't sell health insurance. But this is informational content, and it's important for young adults and parents to consider how healthcare insurance plays a role. So make sure you confirm that you're on your parents' healthcare plan. Why? Because you can usually remain on your parents' plan until age 26. However, do not wait until your 26th birthday to learn the exact date your coverage ends. The timing can differ depending on the type of plan and state requirements. Compare the health insurance available through your employer, the health insurance marketplace, and any other eligible options. Look beyond the monthly premium. Review the deductible, co-pays, prescription benefits, provider network, and annual out-of-pocket maximum. Losing coverage through a parent may create a special enrollment opportunity, but a deadline will apply. Put the date on your calendar and begin comparing your options early, if needed. The next type of protection helps when an illness or injury stops the paycheck that pays every other bill. This leans toward those 18 to 25-year-olds that went straight into the workforce. During this time in your life, your most valuable financial asset may be your ability to earn income for the next 40 years. Disability insurance can replace part of your income if a covered illness or injury keeps you from working. If your employer provides disability coverage, find out how much income it replaces, when benefits begin, how long they last, and whether the benefits are taxable. Workers' compensation is not a substitute in all cases for a complete disability plan. You need to remember this. Workers' compensation generally applies to job-related injuries or illnesses. The problem is, many disabling conditions happen outside of work. Once your income is protected, the next question is, would anyone else be financially affected if you were no longer here? Which leads to Check 5, how to give life insurance a job. Not every 18-year-old needs a large life insurance policy, but age alone should not make the decision. Life insurance may have a job, especially if someone co-signed on a loan, you have dependents, or your loved ones will struggle to pay your final expenses. Not to mention, if got married or started a business, buying coverage while young and healthy makes it easier to qualify for lower costs. The best way to start is by identifying the financial problem life insurance must solve. Then I match the coverage to that purpose, not a random number. That brings me to the insurance coverage, the benefits you already have through work. This is where Check 6 comes in. Read your workplace benefits. Most of the areas I've covered. Your first workplace benefits package may include, like health insurance, life insurance, short-term disability, long-term disability, and other options. Don't just click through the enrollment form to finish it faster. Learn what your employer pays, what you pay, what coverage you can take with you if you leave the job, and whether your beneficiary information is complete. A beneficiary is who or what is named to receive certain benefits when you pass away. The key things to remember are review beneficiary after and major life change. Save copies of your policy. Know where those documents are located and make sure someone else knows the policy exists and where to find them too. So let me finish with the checklist I want every young adult to complete, which is Check 7. Complete the 18 to 25 insurance checklist. Number 1. Confirm which insurance policies include you and when that coverage ends. Number 2. Protect your belongings and personal liability. Number 3. Verify that your auto policy shows the correct driver's address, vehicle ownership, and vehicle use. Number 4. Know your health insurance deadline before age 26. Number 5. Review disability insurance to protect your paycheck. Number 6. Decide whether life insurance has a specific financial job. And lastly, organize your policy numbers, insurance cards, agent information, and beneficiary documents in one secure place. Review this checklist whenever you move, buy a car, change jobs, get married, have a child, or begin using your vehicle for business. Insurance should change when life changes. That is how you move from simply having insurance to actually understanding your protection. Between 18 and 25, the goal is not to buy every insurance policy available. The goal is to remove dangerous assumptions and understand which coverage gaps could set you back financially. If you are a parent, share this checklist with a young adult in your life. If you are between 18 and 25, use this checklist before your next move, job change, or major purchase. Now, if this content was helpful, place a thumbs up in the comment section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video on your left for more insurance and financial tips. And as I like to say, call Jay today.